Hey guys, what's going on? Jeb here, and in today's video, we are going to be talking about a very serious setup for why Bitcoin might be about to rally back up to 112,000. Today, we're going to be going over this chart. I'm going to break down for you how Bitcoin is going through currently a B correction in an ABC movement to the upside. We're going to go over the bottom location that I expect Bitcoin to bottom at, and I will also be going over the price target that we see for Bitcoin. So this is kind of what we're going to be looking at today. We're going to be looking at eventual bottoms. Was $98,000 the bottom? Was it not? What would a bear market look like? We're going to go over all of that in today's video. So without much further ado, guys, let's go ahead and dive right on into it. The first thing I want to do is completely remove everything from this chart, because this is how your chart is going to look when you first pull up the chart of Bitcoin. There are a couple of different pieces of information that we need to add to our chart immediately, which would be this uptrend here on the regular chart. This is a very important uptrend because this is the bull market support uptrend. And I also want to show you briefly the 50 weekly moving average. The 50 weekly moving average on Bitcoin is sitting just beneath us, helping to give us support. We did manage to put a bottom in on it. We briefly wicked below the 50 weekly moving average, but so far we are still above it, which is very encouraging. And so long as we're still above the 50 weekly moving average, that is going to give us somewhat of a bullish bias. On top of that, as you can see, Bitcoin is still somewhat above the logarithmic uptrend, although for the most part it has broken. If we were to draw it right here, though, the logarithmic uptrend, bull market support uptrend, based on our bottoms back at $15,000 and our bottoms here, it is also giving us support in this zone. So in general, Bitcoin is close to a bottom. It's close to the kind of zone that would trigger a major correction, but we're not there just yet. And so far, Bitcoin is still sitting pretty with support that gives us support down here around 95. Now, let's talk a little bit about the shorter term time frames, because this is what is becoming an absolutely beautiful market. This correction since October the 6th is the kind of market that I look for when I create educational material with technical analysis, because it just fits the textbook definition of certain patterns so well. We're about to mark up this chart and give you a bunch of very specific predictions, so stay tuned. We're also going to give you some trade entries. I'm going to explain an entry that I took earlier this morning as well. The first thing that we want to start with is defining the scope of the analysis that we're going to do. We're going to be doing analysis on this chart after October the 6th. We are doing analysis specifically on the correction off of the all-time high, and we're going to talk about where Bitcoin might be finding certain bottoms and what kind of extrapolations may be taking place. So we're starting right here, and the first thing that we want to look at is the market through the lens of Elliott wave formations, because this is a very, very obvious Elliott wave 1, 2, 3, 4, 5 pattern twice in a row. So the first thing that we see here is a 1, 2, 3, 4, 5 Elliott impulse wave movement. Let's define that. First and foremost, we have to go over our rules. There are 3 major rules to defining a 1, 2, 3, 4, 5 Elliott impulse wave movement that will help to predict the ABC bounce, which we'll get into in a second. First of all, the 2 wave, we have the first wave here and the second wave here. The 2 wave cannot go below the beginning of the 1 wave. So this, for example, we cannot see the market go up to $127,000 and then correct and call that the 2 wave. That wouldn't be the 2 wave. So for example, the 2 wave does not go above 126, so we're good. The second criteria for 1, 2, 3, 4, 5 Elliott wave is that the top of the 4 wave cannot go above the top of the 1 wave. And as you can see, that criteria is met. We hit 116 here. The bottom here is 120, so that fits. And then also the 3 wave cannot be the smallest. So this is a little bit of outdated market, but we want to talk about this because it actually gives us context for where we are right now on 11/11. So this is a confirmed Elliott wave movement, which gave us an A, B, C breakout. Now, the reason that this is important is because when you see a 1, 2, 3, 4, 5, then you should expect an ABC. And if the 1, 2, 3, 4, 5 predicts the ABC, then that means that you can trade a lot here in this ABC with a lot of technical confidence. I'm showing how this worked in this market because we're doing the exact same thing over here. So just stay tuned. Give me like 2 minutes to lay the foundation, and I'm going to build a really cool house on it. Okay, so we see the ABC. What Bitcoin typically does is on the B wave, what we will typically see is that Bitcoin will drop back down to the 0.618 Fibonacci level. As you can see right here, we drop back down to the 0.618 Fibonacci level multiple times, bounced and rallied. And almost always what you're going to see happen is you're going to see the market rally right up here above the 0.1 wave. Now, there are a couple of different ways we can draw this. We can also draw this based on this data right here, which would have given us the price target on the C wave. We didn't quite hit it all the way, but the point is we were able to make some predictions about where the C wave went. Now, let's move forward to our current market. In our current market, what Bitcoin seems to have done is the exact same thing once again. We have a 1 wave, 2 wave, 3, 4, 5. Now, this is not the most beautiful 1, 2, 3, 4, 5 pattern that I've ever seen, because the bottom of the 5 wave actually is right there at the exact same level as the 3 wave. But there's no rule saying that Elliott wave cannot look like this. There's a rule that says that Elliott wave can't look like this. There's actually no rule that says that the 3 and the 5 wave can't bottom out at the same place. There's no rule that says that. So this is a 1, 2, 3, 4, 5 Elliott wave structure, which means that we should be able to predict an A wave, an ABC correction to the upside off of the corrective movement. And that gives us a lot of very interesting trade setups, and we're starting to hone in on why I took a long entry this morning is because of that setup. Now, what you end up seeing happen here is that Bitcoin goes through the ABC, right? A, B, C. Now, the reason that this is so interesting is because we also have to layer in some confluences, right? When you're setting up trading and doing analysis, you want to come up with certain things called confluences, which is basically an area of price where multiple different technical indicators are giving you signals. And one of the confluences that we've seen recently is that Bitcoin had quite a lot of short liquidations that were sitting up here between 106.5 and 107. And in fact, yesterday, we ended up seeing a liquidation event to the tune of $50 million that sent Bitcoin exactly as we anticipated up to that level. As you can see here on CoinGlass.com, you can see that there was a large liquidation event here, a $50 million liquidation event that happened at 2,000 hours yesterday afternoon. That is the exact liquidation event that sent Bitcoin right up here and completed the A wave. So we're going to go ahead and fix the A wave right there. Fix the bottom of the A wave right here, top of the A wave there. We have our A wave defined. Once we have our A wave defined, then we can start making pretty strong predictions about where the bottom of the B wave will be. And then what you typically want to do off of the 1, 2, 3, 4, 5 pattern here is you enter something called a 3-5A trade entry. You're looking to enter at the bottom of the B wave and long the C wave, which is why this is so important. We were able to successfully long this C wave, and we're trying to do the exact same thing again right now, which means we want to find the bottom. Now, I already went partially into a trade, and I'm going to ladder entries down, which I'll explain in just a second. So, but before we get a little any farther, I also want to show you that we're seeing long liquidations take place right now. We saw the short liquidation give us the conclusion of the A wave, right? The short liquidations gave us the conclusion here. Bitcoin was stuck in a range between 105 and 106 with all of the news of the government shutdown and whatnot coming to an end. We saw the short liquidation give us the top of the A wave. It stands to reason, therefore, that the long liquidations might give us the bottom of the B wave. And so the long liquidations, as you can see, were piled high here at about 103.6. So on stream this morning, we were predicting that Bitcoin's going to come right down through that 103 range, and it's going to hit all of those long liquidations. And that's going to give us the bottom of the B wave, which would ultimately give us our entry. If we look at the Fibonacci retracement here, remember what we said before. Typically, the bottom of the B wave is somewhere around the 0.618, right? If we take our Fibonacci retracement right here, you can see that if we draw our fib right here, right? And we're going to exclude this outlier data because it ends up making a lot more of these levels make a lot more sense. The chart looks a lot more beautiful, which is important because you want the chart to look like it matches. You want the Fibonacci retracement to look like it matches the chart because that's typically math psychologically how people are going to draw their fibs. So we're going to exclude this data, pull our zero level on the fib retracement off of this high right here, 106.5. That makes confluences happen here, 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 etc. Right when we break through the 0.618, we rally. So it looks good. It looks clean. That gives us 3 levels to look at. 103.8, we've already fallen through that. 102.9, that's right below us. And then, of course, the coveted 0.618, which currently sits at 102,000. Overall, we are seeing a large number of long liquidations in this zone because people didn't do the analysis that we're doing, and they put their long liquidations in the wrong place. That's why all of these people are getting liquidated, because they didn't do any technical analysis to establish where their risk to reward rate to establish their risk to reward ratio, and they didn't do any technical analysis to establish where they should put their liquidations. Liquidations on longs should be down here between liquidations and stop losses should be down between 101 to 101.9 right now, below the 0.618 for proper risk management. So what ends up happening is the market comes down here and eats the long entries. Comes down and eats the long liquidations. And as those long liquidations are getting eaten, that triggers a reversal because the market has bottomed, and then that's when you go long. And so right now, we are in the middle of hunting for a long position, and we are going to be watching this very, very closely because generally speaking, Bitcoin is probably going to put a bottom in somewhere between where it is right now, which the most recent bottom was 103.1, all the way down to 0.618, which is at 102. This is why I took a market entry at 103.5, and I also have an open order. Let me just make sure of that specific entry, but I have a market open order, a limit order open with an entry at 102.7 right now, which is the exact long position that I deleted earlier. So we are looking at, which is the exact chart that I deleted when I showed you the market earlier in the video. And then we also have an exit at 101.9. This is going to give us a 5.25 risk to reward ratio. So if Bitcoin drops down here, I already have the limit order set up to grab that entry, and we are just going to target right up here at the top of this range. Because if we see the bottom of the B wave come in, then that C wave is likely going to send us well beyond the top of the A wave, but I'm able to get a 5.25 risk to reward ratio. I'm fine with that risk factor. As we start getting higher up in this range, I might start pulling in that stop loss and laddering it up using basically a trailing stop loss kind of method, but doing it manually. So may not actually take the profit there, but this is the actual trade setup that we're going to go for. I'm not taking profits on the trade until we get there. I might let it run for longer, but I'm not going to let it run for any less than that. This is an extremely high probability trade setup because you have very, very, very safe and very contained stop losses, and you have a very well optimized entry based on actual technical analysis. This is not the kind of nonsense you see over on X where people just say willy-nilly, oh, market's going to do this, market's going to do this, and they just dump all their money in at a random place and they're gambling. If you are trading without technical analysis, you are gambling. It is that simple. And so what we want to do, as I said, is optimize our entry. So this is the optimized entry that I'm looking at right now. This is the long trade that I'm looking at. I entered 25% of it up here, market, just in case it does bounce higher. And then the other 75% of what I'm going to deploy into this trade will be getting deployed into this trade at 102.7, completely automated. I'm not going to touch that entry. I like that entry. And then that would be a rally from there. Now, why would we do that? Well, remember, the ABC wave typically has the C wave be at least the same size as the A wave. Generally, it's larger. And actually, in Elliott wave theory, there are several different ways that you would predict the size of the C wave breakout. And one of them has to do with a trend-based Fibonacci extension. So you pull the trend-based fib right here. That would point to a 1.618 up here at 111.6. I think that 111.6 very easily could get hit on that C wave breakout, and there's a couple of reasons why. The first reason is because that would be the local high. That would be the local high. It's the top of the two wave. This is actually one of the places that you can put a prediction is at the top of the two wave, right? It's a relatively aggressive one, but this is a large ABC correction in relation to the size of the 1, 2, 3, 4, 5, which is overall, by the way, very bullish. If the correction is larger in ratio than the drop, then that's actually an overall market bottoming signal and could potentially point us moving towards the upside. But the other reason that I'm looking at 112 is that we have a large amount of liquidations up there as well. And when we overlay the confluences here and we look at the fact that the market is hunting liquidations right now, what you're going to see when this chart finishes loading is that there's an enormous amount of liquidation sitting up here at 111.7. So we have the Fibonacci extension giving us 111.6, and we have the confluence of all of these short liquidations sitting up here right above that local high. It stands to reason that Bitcoin would revisit this level at 112. It also stands to reason that we'd revisit that level at 112 because it is a previous all-time high. So in general, that's where I think Bitcoin's going to go. So I'm going to let an entry take right here. If we drop down to 102.7, I'm going to hold it until at least 106.9, and then I am either going to exit the trade depending on what the market conditions look like at the time, or I'm going to continue to ladder that stop loss up, and maybe if an uptrend forms, I will ladder that stop loss up beneath the uptrend, right? We'll kind of allow our take profit strategy, our stop loss strategy to develop with the trade. Sometimes you've got to let that happen a little bit just because the end of the trade might be so far off in the future. It's difficult to tell exactly what it's going to look like right now, but we're going to hold that at least until we sweep these highs up here at 106.7. So that is the trade that I am entered into right now, and I would love to teach you exactly how to do this trade. Literally, I'm working on a course right now to teach you how to do this exact trade, and I'm also going to give it to you for free. But the way that I'm going to give you this course for free is I'm going to ask you to do one thing. I'm going to ask you to do something for yourself, something that you're really going to like. And I'm going to ask you to sign up for our sponsor today, who is Phemex. If you guys have not already signed up for Phemex, I highly encourage you to do so. They're one of the most trusted cryptocurrency leverage trading platforms in the entire game. And the reason that you should sign up for Phemex is because during the 10-10 crash, when the market completely evaporated, Bitcoin fell through the floor. A lot of people did not have stop losses trigger. You can imagine how dangerous it is for a stop loss to not trigger because it's your entire risk management strategy. And a lot of exchanges failed to trigger stop losses because the market depth wasn't great enough for the orders to get filled. That did not happen on Femex, which is why shortly after the 1010 crash, we brought on Femex as a sponsor because they are one of the few exchanges that took very good care of their customers, and all trades went and executed exactly as were expected. Femex is going to take very good care of you. They have a phenomenal trading platform and trading interface over here. Very, very, very excited to have Femex as a sponsor. And part of the reason that I want you to sign up for Femex is because when you do, I'm going to give you access to the trading course that I'm working on in Femex for free. As you can see, we actually set up this trade. This is a video that you will see in the trading course. And as you can see, we talked about an entry right here. That trade went full profit. And so when I shoot the next video in the trading course here in the next day or two, we're going to go over how amazing that trade was. So stay tuned because a free trading course is coming your way. And the way you get access to it is by signing up for Femex with the link in the description box down below and depositing $100. That's all you got to do. Sign up for Femex, deposit $100. You're going to get our free 5-part trading course for free that'll teach you exactly these strategies that I'm going over. So sign up for Femex with the link in the description box down below. I'm going to show you how to find these strategies. They happen all the time. These are going on the hourly chart, but these kind of setups are also happening day in and day out, over and over and over again on the 5-minute chart, on the 1-minute chart. It's a very simple pattern to trade over and over and over again. It's a trading strategy that I want to teach you because you're going to be able to use it to go out there and start actually making money in the Bitcoin and cryptocurrency space. So, in short, conclusion time, because I know that was very complicated. I expect Bitcoin may drop down to, at the very lowest, 102,000. Maybe worst case scenario, we drop down to like 101.5. I get stopped out and then I have to re-enter the trade. That's fine. I don't mind that. That's where I think Bitcoin's going to catch a bottom. With Bitcoin catching a bottom there, that is going to be a higher low, because our current low is 101.5. If we set a low any higher than 101.5, then we have sustained the uptrend, and Bitcoin would be expected to set a new higher high next, up above 106.6, which of course is an optimal trade entry should we be able to hold above that level. Now, I also expect that this is going to allow Bitcoin to make a movement at least back to 106 relatively soon, especially, by the way, I forgot to mention this, now that we filled the CME futures gap, right? This drop was to fill the CME futures gap from the Sunday pump, right? We're just undoing the Sunday pump, but the Sunday pump still happened. It's still on the chart, so we're still receiving the bullishness of that. And so I believe that Bitcoin is going to be able to rally back up to 106 at some point later on in this week, potentially moving up towards 112 next week as we get closer to the end of quantitative tightening, which is forecasted to end on December the 1st, and as we get closer to a decision about whether or not we are going to see rates cut in December. Mirren is calling for a 50 basis point rate cut, which is very exciting. We don't know for sure whether a rate cut is going to happen or not, but at the end of the day, we are seeing a macro shift away from hard money to easy money, and that almost always is a very bullish thing for Bitcoin indeed. So there is a high possibility that Bitcoin is done being below $100,000 for a time, and I do think that this trade entry that I've given you is one that is going to end up being a very high probability one. So if you want to see more like this, again, make sure to sign up for Femex, deposit $100, and get access to that free course when it comes out. Also, make sure to check out our Discord server. If you enjoyed today's video, make sure to hit that like button, subscribe to the channel, share it with someone that you think might find it valuable. And before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.